Good morning, everyone. This is Anae Augustini. I am the CEO of CID Insurance Programs, and I want to welcome you to our webinar on workers' comp, Learn the Underwriting Aspect of Work Comp. In addition to myself today, I want to introduce our instructors, which will be Cesar Serrano, who's our new business underwriter for work comp, and Lexi Goldspring, our renewal business underwriter. Say hi, you guys.
Good morning, everyone.
Hi, everyone.
And then I want to also include Jacob Cole, who's our marketing specialist. He's the behind-the-scenes guy who makes sure that everything's running smooth for you. Say hi.
Hello, everyone.
Okay. So we're going to spend 30 minutes together, and let's go talk about logistics. And as many of you that have been with us before on webinars and those that haven't, you will be muted. And that's because there's so many participants and we can't all talk at once. So you won't be able to speak, but you will be able to hear everything and see everything. Your voice is really important to us, however, so please pose questions as we go along in the chat room throughout the webinar. And that way we will answer them in the moment as they come in so that we won't have to wait till the end to answer your questions. And then there'll be a short survey after the webinar, and your feedback's really important to us, so we would appreciate it if you would take the short survey. So let's talk about what we're going to learn today. The objectives. Now, we're shaking it up a little bit today. We're going to start with the renewal process. Workers' comp is an interesting beast. However, Lexi's going to be talking about how the idiosyncrasies of the work comp renewal process. And there are some unique things to work comp that you need to really watch out for. But in general, she's going to be really talking about a renewal process that you can use for all of your policies. And she's going to be showing you some simple tools to use. And then Cesar will be coming in behind Lexi to talk about workers' comp underwriting, how to obtain competitive new business quotes, and what's the secret to a new business presentation. So all of this should be very helpful. And in general, even though we're going to be focusing on work comp, these are all going to be tools that you can use for every aspect of your writing commercial business. So let's get started. I'm going to introduce Lexi.
Okay, thank you, Anae. So in our office, we have a renewal process that we follow, and as Anae mentioned, this process is not just related to work comp, but actually all our departments run the same renewal process. So we can confidently say that we have an organized renewal structure that does produce efficiency and success. And we share our process to encourage our brokers to implement their own process to properly manage their renewals. So you want to manage your renewals monthly by expiration date, and the goal is to retain all renewal policies. Well, we use a process called the 60-30-10 renewal process, and what that means is we begin our process of review 60 days in advance from the effective date of the policy. And that review, it includes verifying information on the risk, and also we take in consideration remarketing with another carrier. So we do market our accounts to other carriers to find the most competitive quote for the insured. So you should also, 60 days prior, inform your insured you'll be working on the renewal, request that updated information from them, and then also inform them that CID will be marketing their account around to find the best premium. And then 30 days before the renewal date, we will present the most competitive carrier with a summary of the work we did, or we may just send you a couple options if they were close in premium. But at this point, the broker should also present renewal terms to the insured, and they will have 30 days to review or make any changes to that quote. And then lastly, we know people get busy, so we send a 10-day reminder informing you the renewal is approaching. And then if you're using an expiration report, you'll be monitoring it on your own, so you'll be aware of what is coming up for renewal. But when you're tracking renewals, you'll know what policies renewed or did not renew. And when you utilize an Excel sheet, it's very resourceful to get the total month of PIF, which is policy in force, and the total month of premium. And then from there, you can receive your retention ratio. And your retention is very important to keep an eye on monthly to make sure that you're always growing your book of business and retaining it. And then once that policy renews, two key elements to look for is if you have received the policy and if you have been paid commission. So issued and paid are very important, and we can move on to that expiration report that I mentioned earlier. Okay, so this is the managed renewals by report. And just as a reminder, even though I do specialize in work comp, this applies to all renewal business. So this is an example of the renewal Excel spreadsheet that we created, CID created, to help our brokers monitor the renewal list. And you can actually find this on our website at CIDinsurance.com. So click on the resource tab, and then you click on templates. And from there, you can download it. You can download the report and open it. And I'll review it briefly. So this spreadsheet is set up by year. At the bottom, you can see that there are tabs per month, January through December. And as I mentioned, this is the most effective way to track renewals. But regarding the tabs at the top, this is how we determine how to track our renewals. So if you go down the line, you can see expiration date, name insured, policy number, and so on. And then the last three columns, you would just put Y for yes, if they renewed, if a policy was issued, and then if you received commission. So it is important for each of you to think about the best way to handle renewals. For example, if you're a farmer's agent, let's say, and you don't have an agency management system, then you'll have to start somewhere in tracking those renewals. And ideally, the best way would be to drop the renewals into a spreadsheet and then start a renewal process. And for those of you who may have an agency management system as an independent broker, you can drop your renewals into this spreadsheet. And this will help you also for the following year, let's say in 2020 when the policy comes up for renewal again. So this is our renewals by report, and we can move on to the next slide for renewal tips. Okay. So in your day-to-day, most of your service that runs your agency is probably more on personal line side versus commercial side, but it is important to treat every renewal like new business. So you have to touch a policy at least once a year. It's just important to regroup at renewal and take your time, being very professional. Then you'll want to send a written proposal to the insured and then send us a renewal bind order. So although most workers' comp policies, they do auto-renew, we still request a bind order for our record. And also keep in mind to always monitor your retention. The goal is you should be trying to retain at least 90% of your renewal book. And I do want to mention, in the case the insured does not request their policy to be renewed, then a signed LPR form, which is a policy release cancellation form, it must be completed. And I only mention that now because many policies do auto-renew and the insured may be unfamiliar with that process. And at renewal, you want to be asking what other coverages do they need. It can become an E&O exposure or area if all lines are not being offered. So at minimum, you should put in the renewal terms when sending the quote over. And while you're working your renewals, you'll also want to ask for other businesses or the insured for a great referral for new business. Lastly, you also want to spend 50% of your time on renewal retention, but also 50% of your time on new business. Both are equally important. So you want to create that good balance to focus on both. And then moving on to audits.
Well, and Lexi, this is an interesting area. So this is probably the time that you could start differentiating the things that are unique to workers' comp when it comes to renewals.
Right. Yeah, definitely. So Caesar, he'll be discussing with you the establishment of payroll before binding, but here I'll be discussing the payroll after the policy is finished. And as the name mentioned, from an underwriting perspective, audits is where I see some of the biggest problems. So in workers' comp, when the policy renews, it is not done at that point because the insured will have an audit that has to be completed for the expired policy. And it's important for you and your insured to know that all work comp policies are subject to a premium audit, no exceptions. So this is mandated by the state that they come back around and determine if the payrolls were accurate, so the true premium was charged for the exposure. And once that audit is issued, based on what the insured reported, the insured is going to either receive a refund or they will owe additional premium. So that means you may also either earn commission once that audit is completed, or you will owe commission back. And then next, I will cover some areas, situations that I've run into when it comes to audits. Okay, so of course we don't want to make the same mistake twice, but a lot of things have changed over the years. Nowadays, there's really no involuntary audit, but majority of audits are now actually online or over the phone. For some of those bigger premium policies, a physical audit will be conducted, but at renewal, you'll want to have the audit conversation with your insured. So they understand when it comes to the audit, they'll have to fill out an audit report. They may have to upload payroll documents such as payroll summaries or quarterly tax reports. And then on top of that, they may have to answer a number of questions for the auditor. So this is what you want to inform your insured about. And the reason why it's so important to have that audit conversation with them is because if they go into noncompliance, there are many consequences, and this is what I run into. So I'll give a couple of examples of situations. Noncompliance on their audit can result in 3 different issues. So number one, an estimated forced audit will be issued, and that means that they're charging a large amount of additional premium. Number 2, a cancellation notice could be issued on their current active policy because they're noncompliant. And lastly, if the audit goes months being non-compliant, then at that point, an outside collection agency will step in and bill the insured. And just a quick example, we recently had one of our policies go into audit non-compliance, and when the auditor processed the audit, they ended up putting all of their payroll in the higher class rate. So even though there were lower rate class codes on the policy, the auditor put all the payroll in the higher class because the insured was non-compliant. So of course the insured received a huge audit bill and then they complied afterwards. But we just want to avoid this from happening in the future because it does cause a lot of extra work. So keep in mind, if the insured receives an estimated audit, all the insured has to do is comply, and then that non-compliance fee will be removed. So moral of the story, just make sure the insured complies with all documentation requests. Be very proactive with the insured when we forward those audit compliance reminders. And that's everything for audit. Now Cesar will discuss new business. Cesar?
I'm sorry, I was in mute. I didn't want to interrupt Lexi. Anyway, thank you for the time. So when it comes to new business, there's a few things that you want to know or get to know about the risk when you're trying to obtain all of the information. You really want to get a really good description of the operations and what the business is all about. We really want, as far as the underwriting goes, we really want to get to know what all of those operations are. Pretty much everything that there is to know about the business, just so we know how we are properly classifying the business, especially if it's a new business where you're trying to establish class codes and make sure that you're assigning the right class codes to them. But one thing to look out for when you're talking to a new prospect is, you really are going to have to end up determining whether it's a bush call. Are you really going to be able to help them out, or is it going to be something that you're going to be spinning your wheels and wasting a lot of time and not being able to find the right company or find the right type of coverage or right carrier that's going to be able to you're going to be able to get a competitive quote from. So you really have to kind of know the situation. Does it feel right that you're able to get all the information that you need? Is it a type of business that you're confident that you will be able to find the coverage for? So just this little things to look out for. one example, when doing this, I did work with a submission a couple of years ago that came into me as a plumbing company, and it was a new in business, but they were doing piping for a brewery, or for breweries basically. So they really didn't fall into a plumbing per se, because they were installing cabinets, and they had input in the application that it was a furniture installation. It didn't really make a whole lot of sense why they would do that. So you really want to make sure that you get to know exactly what it is that they're doing, because I ended up finding out information through website search and things like that, so I could determine whether that was correct or not. So we ended up figuring it out, but you want to try to get correct information up front, so you're spending the least amount of time as possible in doing this in underwriting. So anyway,
Caesar,
the next.
Caesar, that's a great
Yep.
opportunity. So brokers that are, there's so many different types of businesses out there. So one thing that they can count on you for is that you are well versed in understanding the class codes for many types of classes of business, and you can assist them in with determining a lot of this.
Definitely, and if there's ever a question, the Work Comp Rating Bureau is a really good resource to try to determine, what classification we can properly put it under. Anyway, moving to the next step, the new ventures. We do consider new ventures. It's not we don't shy away from it, but we do want to know, the type of business that it is, because there are some things that even as a new venture or no prior coverage, we just cannot take a look at. But for the most part, I want to say that almost a majority of the classifications we can go ahead and consider as a new venture. So don't shy away from looking for those that are new ventures or no prior coverage. It's actually probably better when they have no prior coverage but have been in business and they're just hiring employees for the first time, because now you know that they have established experience, versus no experience and no prior coverage. That doesn't look as great as having prior experience. So that's always good to know. Lapses in coverage, as far as that goes, we can consider lapses in coverage. It is on a case-by-case basis, so it's not like we will consider every scenario or every situation where there's been a lapse in coverage. So we may not look at something that's 6 months lapse in coverage, but if it's within 30 to 60 days, and depending on the situation, maybe they had a accounting issue that caused somebody to accidentally not pay, or maybe not report on the final audit that caused the cancellation. That could be a little bit easier to explain versus just not wanting to pay, or maybe some other situation that might have happened. But again, it is something that we will consider. So come to me with those as well, and we can figure it out together. Multi-state exposures, those are okay as well. There's a lot of businesses out there that may have operations, not for example, like in California, may have operations in a neighboring state like Arizona or Texas, or vice versa. May have something like in Arizona and have operations outside of that state as well. Those are fine as well. Most of the time, those can be written on one policy versus separate policies. So again, those are something that we can consider through multiple carriers. Moving on to the next slide, other factors to consider when underwriting is the experience modification, or the modification factor of a business. So especially on the larger ones, you have a little bit more payroll, more premium on the books, then the Workers' Comp Insurance Rating Bureau does assign an experience modification factor. and it depends on, whether they've had claims or they've had no claims and have an excellent track record of that. They get rewarded for that. Or they get penalized for having claims as well. There is a limit to how high we can go on the experience modification. There's always exceptions to that. It really depends on the situation. So you could have an insured that has just multiple claims for many different reasons. That probably doesn't look as good as if you had an insured that had just one large claim that really affected their experience modification and skyrocketed for that one claim. That can be explained. A lot of carriers can understand that kind of situation versus having a problem with claims and multiple claims for sometimes even the same type of injury. That just means that an insured just isn't really paying attention to the safety of their employees. So, but on the opposite hand, you have insureds that are very responsible and have a great loss history, and they get rewarded for it. And those are, you're going to have a nice little credit on your policy for having good experience. So, considering when you're obtaining information from the insured, always obtain the loss history. That's really going to tell you where they're at, what kind of situation we're looking at. So just always request for that loss history, because it is very important in the underwriting process to be able to determine where we can take into account to what is the best fit, what carrier, things like that. Next slide, the new business quotes. When you're preparing a quote, we have some pretty good resources. Or when you're completing the application first, let's go to that one. The application process, again, I'll go back to what I said at the beginning, is try to obtain as much information about the business as possible. The Accord 130 application is where it's at. That's what we are using to process the information. So complete that Accord to the best of your ability. All the information that we need typically will go into that application, and then we'll also have a supplemental application for industry specific businesses that we may need some additional questions on. But just obtain as much information on the Accord app. Most importantly, always the federal ID number, contact information, ownership information, address information, where the locations are at, and things like that. And just again, going back to the classifications and making sure that you're obtaining the correct payroll numbers, the employee count, and things like that, to make sure that we're properly going to quote something for you. The next thing is providing the current premium. Again, going back and trying to get some history on the account. If they have prior coverage, then having a history of their previous payroll amounts for the last few years, and as well as their premiums. That really gives us an idea of where we're at, where we should be at, and if we're going to be competitive on it, and what we can do to get more competitive if we're not initially as competitive as we would like. So we can definitely work with you on trying to be as competitive as possible with this pricing by adding credits and things like that. Again, it does depend on their experience and a few other things, but I've had situations where I thought we had no chance whatsoever. We were 25% over the competition, and just simply asking a few additional questions from the insured, like do they have a safety program in place? Has the business been physically inspected? Does it look like they run a clean operation? And if they keep their work areas clean and safe, then sometimes that's enough to provide enough of a credit on the account to win it. So don't discount any detailed information about an insured, because we can always use that information. Next one on the proposal presentation. We provide a proposal for you. I would always encourage you to use your own proposal template. We do have some great resources on our website at CIDinsurance.com for proposals, and don't be afraid to look them up, use them. They're really good fillable forms, and just make it your own. Always, when you're preparing the proposal, I tend to already propose the net rates on there just to make sure that you have the most accurate information. A lot of times you could lose an account just because you haven't even put down what the net rates are.
What do you mean by net rates?
And an insured may not know, but if let's start with like a $10 rate, and then you have some discounts applied on the quote that that'll bring down that rate, but you're not showing what that net rate is. So that basically what that is the base rate of those $10 minus the discounts that are applied, and then that gets you your net rate. So that's going to tell you if you really are competitive. But some insurers may not understand that. Just by showing that you have a discount on the account, you really want to know where that actually puts that insured as far as the rate goes. So to let you know if they're more in line to what they have been proposed previously or that they've had in the past. You just really want to give them the most accurate information, and so that they are informed as to what they have in front of them. Also, after that, you're going to want to show them what the specific payment instructions are. There are options as far as payments go, and the options have increased over the years from just a stipulated payment program where you have a down payment in 9 installments or what have you. That it's dependent on the premium size. So smaller premiums, you may not have as many options. You may have like a 30% down and 3 quarterly installments or something like that. But there, options go between that to a down payment plus 9 or 10 installments, and then you also have some payroll reporting options that may help them as well. So there are definitely options that you want to give them the right option. So always discuss with them what they've had in the past, if it's an insured that has had previous coverage, or what they're comfortable with, because that will help me in proposing it as well when I'm preparing the quotes for that. And again, it's all dependent on the premium size, but there are definitely a lot of options that you just want to give them the right option. So that's really it as far as the new business.
Yes, great job, both Lexi and Caesar. And that I look at, for those of you that are doing business with us already. If you haven't worked with Caesar and Lexi, they are wonderful to work with, and they do a great job, very knowledgeable and very responsive. So I encourage you to continue doing business with us. And those of you that may be new to us, we encourage you to take the opportunity to submit a work comp submission today. And we want to, if there's any questions, I didn't see any questions come in while we were doing, so if you have a question at the moment, please type it in while I'm finishing up. You can see Caesar's contact information for new business, and then you can submit any applications to submissions@CIDinsurance.com. We also will be emailing you a work comp template, some information about work comp that you can use, a marketing piece, and that maybe you can cross-sell with some of your renewals to make that easier for you to go after or cross-sell your existing renewals, and some other goodies that Jacob's going to send out to you as well. And again, we have the survey, so we really appreciate your feedback. And if you have any suggestions of other types of webinars that you'd like to have us put on, we're really interested in hearing from you. So again, I want to thank you all for joining us. And even if you're still typing in a question, that question will come to us, and we'll get back to you individually if I don't see if we don't get it while we're on the air. Again, thank you for joining us. Have a great day.
Thank you, everybody.
Thank you.